The formula was a formula based on common sense, based on deficits, based on how we've been treated over the years, and based on raw numbers. And we're going to have a couple of more coming out today. Brazil, as an example, has been not good to us, not good at all.
The U.S. president says his tariff formula is based on common sense, but it's again starting to look more like chaos. Trump's now threatening a 50% rate on Brazil, starting what he calls a witch hunt against former President Bolsonaro. Live from Singapore, this is Insight with Haslinda Amin. Trump also says the U.S. will slap a 50% tariff on copper imports starting August 1st, sending the dollar and U.S. futures lower. We have a strong lineup of guests to break down the tariff threats. First up, Georgetown law professor and former WTO appellate body member Jennifer Hillman on the race for trade deals. Then we assess the cost to businesses with the CEO of the American Apparel and Footwear Association, representing more than 1,000 brands. And we speak exclusively with the Malaysian trade minister to find out how negotiations with the U.S. are progressing and what the biggest challenges are. Another day, another wave of new tariff threats. President Trump's latest round includes a 50% rate on Brazil, one of the highest levels seen so far. Brazil is the first country to get a letter that wasn't part of the initial list facing higher reciprocal tariffs back in April, and is one of the few to run a trade deficit with the U.S. In his letter to Brazil, Trump took specific issue with charges against former President Jair Bolsonaro over an alleged coup attempt. Trump said the right-wing populist was facing a witch hunt that needs to end immediately. Brazilian President Luiz Inácio Lula da Silva fired back, saying Brazil will respond using its law of economic reciprocity. Lula saying on social media, Brazil is a sovereign country and won't be tutored by anyone. The Philippines, meanwhile, will seek further talks with the U.S. after its tariff rate was raised to 20%. Ambassador to the U.S., Jose Manuel Romualdez, says a trip to the U.S. is being arranged ahead of the August deadline. And Trump confirming a 50% tariff on copper imports will come into effect August 1st after floating the idea a day earlier. Let's get some insights from Jennifer Hillman, a professor at Georgetown Law. She previously served on the World Trade Organization's appeals body and as general counsel at the Office of the U.S. Trade Representative. Jennifer, good to have you with us. We're seeing some of the highest level of U.S. tariffs since the 1930s. What are you making of the numbers we're seeing so far?
Well, I do think they're extraordinary. I mean, if you look at this, again, this is the largest tax increase we've imposed in the United States in many, many decades. And as you said, bringing tariff levels back to the level we have not seen since the early 1930s. If you look at Asia alone, I mean, when Trump came into office, the average tariff on Asian goods coming into the United States was 4.8%. When this is done, these tariffs are done, if we just stop with what we've got right now, we're at 27%. So it is extraordinary. The other thing that's really extraordinary about it is most of all of these tariffs are being done basically unlawfully. I mean, they violate all of the United States' commitments, that it made to other countries as part of the World Trade Organization, but they also violate U.S. law. Again, a president is not allowed to impose tariffs other than under very specific procedures with very specific evidence for why they're imposing the tariffs that have to be related in some way to trade. And as you just showed, the tariffs on Brazil have nothing to do with trade or with trade deficits or with anything going on in the international economic economy. They're pure revenge. And the president doesn't really have the lawful authority to do that.
Jennifer, so what? So what if the tariffs are against the law? I mean, we know that President Trump has a way of circumnavigating all these laws. And what's the recourse for countries anyways?
Well, I think your question raises two really important issues. One is, what's the recourse for countries? Because if you look at a lot of these countries, they have been negotiating with the United States. I mean, many of them offering to buy lots of things from the United States. Japan saying, we'll take a lot of your LNG. Indonesia offering to buy $34 billion of U.S. crops and fuels. Thailand proposing to lower a lot of its trade barriers. So they thought they were doing exactly what Trump said when he said he was going to get 90 deals in 90 days. And yet here they get these letters saying, oh, no, never mind. Unless you conclude a deal by August 1st, these tariffs are going to go on you. And virtually none of them even know what is possible for them to conclude a deal. So the huge problem is, again, a lack of trust with our trading partners, a real sense of exasperation from all of them of what is it going to take in order to sort of move away from this. And on the legal side of it, for what it's worth, a lot of these tariffs under this so-called International Economic Emergency Powers Act have been being challenged in the U.S. courts. And so far, two courts already have ruled just no. You cannot impose these tariffs under this law, and that's the law Trump has used. Those cases are on very expedited appeals. I personally would expect appeals decisions and potentially even a Supreme Court decision before the end of the year. And I am one of the people that thinks that Trump simply does not have the authority to do what he is doing. The U.S. Constitution gives to the Congress, not the president, the power to impose tariffs. And here we're looking at the largest set of tariff increases, that we've seen, again, in nearly 100 years, none of them being authorized or supported by the Congress.
When you take a look at the tariff levels being imposed on countries, you get a sense, and I doubt people will disagree, that negotiations actually failed. The crux of the matter really, Jennifer, is that the goalposts keep changing. First, it is about addressing the deficit. Then it's about, putting a lid on Chinese exports. Then it is about security concerns. Then it's about some other things. So it is a very difficult and challenging environment to be negotiating a trade deal.
I couldn't agree with you more. And the problem is many of the goals that the Trump administration has said for these tariffs are absolutely in total contrast and conflict with each other. I mean, on the one hand, they say the goal is to raise revenue. Well, if what you really want to do in terms of raising revenue is you want steady, low-level tariffs so that you continue to import a lot and charge tariffs on those. Then the next thing they say is, oh, no, we want everybody to return all manufacturing to the United States. Well, again, if you want to return all manufacturing to the United States, what you do not want is all of the chaos and the uncertainty that they've created, because all that means is all of the investors are sitting, parking their money, not willing to invest because they don't know what the economic situation is going to be even tomorrow. So even their goals are not consistent with each other. And obviously, if your goal is to get rid of the United States trade deficit, what you do not do is put a 50% tariff on Brazil, a country with whom we run a surplus. You do not put big tariffs on countries like Bangladesh that are least developed countries. And so part of the reason they're running a trade deficit with the United States is they can't afford to buy expensive American products. But if you put this big tariff on them, you're only going to make them poorer, less likely to buy more American products, less likely to bring down their trade deficit. So if that's the goal, these tariffs make no sense.
Is it about closing the back door?
Yes, I think there is a big element of saying, wait a minute, we do not want all of the Chinese goods that were made with subsidies, that were made in violation of, taking U.S. intellectual property or taking U.S. technology. We want to make sure that none of those goods can come into the U.S. market via any other market, via any other producer. And so, yes, I think to some significant degree, that's one of the goals. You see that, for example, they did get a sort of agreement, or at least the beginning of an agreement with Vietnam, where Vietnam would accept a 20% tariff, but a 40% tariff on anything that was so-called transshipped. And again, I think what they mean by that, and we'll have to wait and see when the details come out, is anything that contains a substantial amount of components made in China. So I do think you're exactly right that some of this is trying to figure out a way to put tariffs on everyone that is potentially using Chinese inputs in their goods.
As you said, it is about definition. Transshipment is one. The other is anti-American. Any clarity on that? Do we expect clarity given that, a lot of people are saying that even the Trump administration itself isn't clear on those definitions?
We don't know either of them. Again, normally transshipment, as a term, it's been out there for a long time. A lot of us trade negotiators know that term very well. It normally just means, did you cheat? I mean, were the goods entirely made somewhere else and you sewed in a label that said it was made in somewhere else? I mean, that's what we used to think of as transshipment, is just trying to cheat on the rules of origin. I don't think that's what they're talking about. I think they're talking about, again, this notion of if it has significant Chinese components. And again, what does it mean to be anti-American at this point? They're not defining this. If they're going to say that anybody that's doing business with China is anti-American, again, that's never going to work, given particularly the amount of trade that we're doing in Asia, where a number of the largest Asian countries, Japan, Korea, and others, their primary markets are in and out of China. And many of even the developing countries within Asia use a lot of inputs, need a lot of inputs from China. So again, I don't think there is no definition at this point. Nobody really knows what they mean. And again, you think about what that basically says, is that we're going to bifurcate the world, and we're going to fragment all of the trading systems into these blocks of kind of with America or not with America. That has huge costs. I mean, the IMF and the WTO have estimated that if we do that, bifurcate the world into these different blocks, just the bifurcating alone will cost 7 to 15% of global GDP growth for countries. So it's a very dangerous road to go down to say that we're going to separate everyone into these different blocks. And you cannot unwind global supply chains as quickly as they seem to think they could be unwound.
Jennifer, we know that countries must be pretty exasperated with negotiations, but in the end, they do not really have a choice. They have to go along with what the U.S. is asking them to do. Isn't that true?
Well, again, it's not at all clear, kind of what these deals are going to be. To date, we have one agreement with the United Kingdom. And again, it has a number of elements in it, but not necessarily ones that I think would apply in many other countries. So we really don't know where that kind of an agreement is leading. We, again, have this beginnings of an agreement with Vietnam. I'm told that we may or may not get an agreement any moment now with India or the European Union. But again, I think if you look at what's in the deal so far, they're more or less kind of keeping the status quo, not necessarily going to these very high tariff levels. And most of what the countries are pushing for is if we have to accept a 10% across the board tariff, okay, maybe we'll do that. But we then want exclusions from the tariffs on steel or aluminum, 50% tariffs, or we want an exclusion for our cars. Or if you're now going to be doing this 50% tariff on copper, some countries want exclusions from that. If you're going to be bringing new tariffs on pharmaceuticals, semiconductors, any number of the products that are in the queue, if you will, to potentially get tariffs, countries are trying to say we need an exclusion from that, or we need what the UK got in autos, which is the first 100,000 cars comes in at only a 10% tariff before the big 25% tariff kicks in.
Jennifer, great perspective there. Thank you so much for joining us. Georgetown Law Professor Jennifer Hillman there. And later in the show, we have an exclusive interview with Malaysia's Minister of Investment, Trade and Industry, Zafrul Aziz. We'll ask him how negotiations are progressing with the Trump administration and what the biggest roadblocks are. But up next, we'll take a closer look at the impact of tariffs on U.S. retailers and consumers with the American Apparel and Footwear Association. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. The Trump administration's latest tariff strategy could reshape how and where Americans get their jackets and sneakers. Recent deals have lowered tariffs on Chinese goods to 30% and cut Vietnam's rate to 20%. But Other key sourcing countries like Bangladesh and India are still facing steep duties, with rates as high as 35% and 26% respectively. And fears rise that the tariffs will lead to higher prices for consumers, but the Trump administration says there is no evidence of that.
We just published research yesterday showing that there has been no tariff-induced inflation in a general price level since the tariffs began being implemented in January. Quite to the contrary of all of the Cassandras that were shouting that it was going to be extremely inflationary. There's just no evidence of that thus far.
Our next guest runs a trade association representing more than 1,000 brands in the clothing industry. Members of the American Apparel and Footwear Association contribute about $500 billion in annual U.S. retail sales. President and CEO Stephen Lamar joins us now from Atlanta. Steve, good to have you with us. Essentially, tariffs are bad economics, yes?
Yes, they are. Tariffs are taxes.
So where do we go from here? Who is the Trump administration protecting now?
Well, the Trump administration is trying to rebalance trade. They're using these tariffs as a negotiating wedge to bring countries to the table, whether it's the threat of tariffs, the actual imposition of tariffs. And they're also using tariffs to raise revenue. They've talked about the ability of more money to come into the Treasury through these tariffs. The problem is that these tariffs are ultimately paid by U.S. workers, U.S. consumers, U.S. entities. Tariffs are taxes that are paid by U.S. importers, and they, like every other cost, they make their way into the products, into the supply chains, and given enough time, and enough time could be days, weeks, months, or years, depending upon the product, the supply chain. Everybody makes their own pricing decisions. Given enough time, those tariffs as costs will make their way to the consumer in the form of higher prices. It may be other manifestations. Maybe the product will be re-engineered or changed. But consumers will see these tariffs in the cash register, in the pocketbooks in the coming months.
How do you see the industry adapting? Because when you take a look at all the factories in the world, we talked about them, how tariffs are pretty high. Vietnam, 20%, India, 26%, China, 30%, Sri Lanka, 30%, Bangladesh, 36%. These are the factories of the world. If they're slapped with such high tariffs, then what are the implications? What tweaks are we looking at in terms of supply chains?
Well, let's look at the tariffs that we've already been paid. So this industry, apparel, footwear, travel goods, we're already very heavily tariffed. Even before the Trump administration took office, the first time and then the second time, we've been paying tariffs that are actually holdovers from the 1930s when the Smoot-Hawley tariffs were in place. In 2024, we represented about 5 to 6% of imports, but paid about 26% of all of the tariffs that were collected by the U.S. government. So we already have a very high tariff burden, an average of 14, 15%. And so these new tariffs, whether it's 10, 20, 30, 40, you talked about 50% for Brazil, all of those are tariffs that are coming on top of those existing tariffs that we've been paying for more than 9 decades. We're actually hoping that they won't stack them on top of those existing tariffs, but I think that remains to be seen whether that will in fact be the case going forward. So to your question, what's going to happen? 97% of all the clothes and shoes that we consume in the United States is made offshore. Right? So this is an industry that depends on global supply chains to bring product to the U.S. consumer. Interestingly, it's also an industry that depends on global supply chains to bring products that are still made in the United States to consumers all around the world. 96% of the people that wear clothes and shoes on the planet live outside of the U.S. borders. So you need access to global markets and global supply chains. But with 97% import penetration, and the president himself correctly acknowledging that we're not about to rescale, footwear, T-shirts, socks, any of those kinds of industries anytime soon or ever. This is not about reshoring, remanufacturing in the U.S. This is about how to keep those tariff costs low so consumers don't end up paying that bill.
The thing is, Trump has made it clear he wants manufacturing to come back home. It is about the reindustrialization of the U.S. There is no tested playbook for this. How will this work? I mean, does the U.S. actually want low-cost manufacturing back?
Well, I mean, I don't think so. And the president's already acknowledged, I think Secretary Bessent said more or less the same thing, is this tariff policy is not about bringing more apparel production, more footwear production back. We already have some apparel and footwear production. All of the uniforms, for example, that we make for the military, all that's made in the United States. So those areas where it's strategic, those niche markets, there's a lot of that activity there. But we're not talking about rescaling, reshoring, that, as I mentioned, that 97%, that's not going to be replaced with a lower number anytime soon, certainly not in my lifetime. This is really about how to make sure that we can open up foreign trade barriers. There's a lot of foreign government practices that need to be addressed, and I think the president's right to try to address them. And it's also about trying to create more sustainability and predictability in our trading relationships. I mean, our members, they source all around the world. It takes time to plan those decisions, to work with factories, to design the supply chains that are going to support workers in other countries and in the United States. 3.6 million workers in the U.S. in our industry alone, and that timing is needing. We need predictability and we need certainty, and you can't really do that if you're sort of turning on and off tariffs, if you've got letters and deals and other ideas like that going out that aren't actually giving you that level of predictability, that level of durability that you need. And so that's one of the things we keep asking is, if you're going to be moving through this process, stay at the table, get these deals done so that we have the clarity, we have the predictability, so we can make these investment decisions that we need to make.
Is there a pullback from the China Plus One strategy? It wasn't that long ago that we were talking about how the likes of Vietnam, Bangladesh, India are helping manufacturers perhaps rely less on China, hence the China Plus One strategy. What happens to that?
Well, the China Plus One strategy is something we've been doing and talking about. There's been a lot of diversification from China for a number of years now. It takes time, though, right? It's not something you can snap your fingers and it's overnight. It takes a while. You've got to qualify new factories, set up new supply chains. You're working with those new country governments, and if one of those is out of alignment, it sometimes kind of suggests, well, maybe we should really be back in China. I mean, one of the things that's happened in the United States in the last couple of years is, if you look at things like backpacks and purses, we had a trade program called the Generalized System of Preferences, which reduced the duties on products made in countries like Cambodia and Thailand and places like that. You could bring a product into the United States duty-free, and that really juiced a lot of that trade, so it came out of China into those other countries. Well, Congress let that program expire 4 years ago. It still expired under the Trump administration. And so the lack of that program is actually making people wonder if they should sort of put that production back in China.
Right.
When you slap high tariffs on Vietnam and all the uncertainty about what those tariffs might be, that also kind of suggests maybe we should be going back to Vietnam.
Given what we're seeing right now, how do you see global trade evolving in 4 years at the end of this Trump's administration?
Well, we think tariffs are probably going to be here to stay. I mean, one of the things about tariffs, and again, we have a 95-year history of this, is that tariffs have a way of staying in supply chains, and it takes it's very easy to put them on, relatively easy, and it's very, very hard to bring them down. It takes a long time. It takes global negotiations when the parties want to bring them down. So we're likely to see a period of higher tariffs, higher tariff costs. Those tariffs will work their way into supply chains. They will be passed along to consumers. And then what's going to happen is, how will individual countries and individual companies in those countries be able to manage that sudden cost and then the cost increases as they work their way through supply chains over a number of years?
Steve, we have to leave it there. Thank you so much. Steve Lamar of the American Apparel and Footwear Association. Up next, we continue the tariff discussion in an exclusive interview with Malaysia's Minister of Investment, Trade and Industry, Zafrul Aziz. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. Malaysian Prime Minister Anwar Ibrahim will make an appeal for lower tariffs when he meets U.S. Secretary of State Marco Rubio today in Kuala Lumpur. Rubio is attending the ASEAN Foreign Ministers meeting just as President Trump continues unveiling his planned tariff rates for trading partners. Trump said on Monday that Malaysia faces a 25% levy on August 1st, separate from sectoral tariffs unless they cut a deal. The central bank cited trade risks as among the reasons for yesterday's quarter-point rate cut, its first easing since July 2020. Let's get the latest on how Malaysia's negotiations with the U.S. are progressing. Joining us exclusively is the Investment, Trade and Industry Minister, Zafrul Aziz. Minister, give us a sense of what went wrong with negotiations with the U.S.
Well, first of all, Haslinda, nice to meet you as well. It's been a long while. Regarding our discussion with the U.S., that continues. I don't think there's anything that went wrong. We have got an extension of time to 1st of August. That will continue. In fact, as you mentioned, the Prime Minister is meeting Marco Rubio. I'll be there as well. And tonight I'll be meeting on video call with the U.S. Trade Representative, Ambassador Jamison Greer. So the negotiations and discussions continue. Of course, timeline-wise, it's been shifted to 1st of August.
The thing is, the optics earlier were pretty positive. The Prime Minister talked about how negotiations and talks were excellent, and you yourself gave a pretty positive feedback on the back of those talks with the U.S. I'm just wondering, what is it that the U.S. is demanding from Malaysia that Malaysia could be resisting?
It is about time. We need more time because we need to engage our stakeholders, the various industries, the agencies, the various ministries. I'm still optimistic that given the timeline, the revised timeline, we can come to a conclusion in our negotiations. It's not been easy because some of the issues need to discuss in greater detail. That's why we needed more time. So to me, I'm still optimistic that we can come to a conclusion.
What are some of these issues, Minister, if you could share with us? Has it got to do with semiconductors, for instance, exports to China?
Not really. Semiconductors have been okay. Export to China concern will be on the chips, but I think that's also been addressed. It's more on agriculture. I think this is an area where we need to look at the different standards in agriculture and in terms of halal recognition, in terms of our digital economy. So those are issues which obviously is not related to tariff, right? On tariff, I think we are nearly there. Issues on what we can do with regards to reducing and lowering tariff. Our tariff to U.S. is already very low. The applied tariff on average is around 5.6%. So that's why I'm optimistic. But having said that, it is still subject to agreement with the U.S. This is still negotiations still ongoing. And like I said, today, so having a call with the USTR to continue our negotiations.
Back in May, you talked about taking the tariff rate to zero. Are you still looking to do that? How optimistic are you that that may still be on the table?
To zero is on sectoral. I'm still optimistic. But again, right now, the discussion is more on the average tariff. Looks like the floor is going to be 10%. So I think we have to be realistic in our targets for the base for tariff at 10%. But on sectoral, I think that's something that we can discuss. Today, if you look at the announcement made by Trump, semiconductors, pharmaceutical, for example, are still exempted from the 10% tariff. So we are hoping that through these negotiations, we can continue to extend the 0% tariff on some of the key exports to the U.S., especially semiconductor.
Talk to us about how challenging it is to negotiate with the U.S. I mean, people have suggested that they are shifting goalposts. First, it is about addressing the deficit, then it's about security concerns, then it is about China. How's that complicated talks with the U.S.?
Well, Haslinda, I must admit, it has been challenging, but all the discussion has been done in a very respectful manner. For me, the negotiations have been with Department of Commerce and also USTR. Of course, I had several meetings with Secretary Lundnik as well. We do talk about issues on economic security, apart from non-tariff barriers and tariff barriers. there are issues that sometimes requires a bit more attention that we may not have given enough attention. So therefore, we will look at that areas in digital economy, for example, and on economic security. I think we've been always talking about the security of the chips that are being exported to Malaysia. So we are looking at ways to have stronger enforcement through stronger laws regarding the importation of chips that are restricted to Malaysia. So these are issues which I think will be discussed with the Prime Minister today, and definitely will be discussed during my discussions with both Secretary of Commerce and USTR.
In your conversation with Jamieson Greer, expected later today, what will be your key message? How do you think you can persuade him to actually see Malaysia's point of view?
Yes, well, one, of course, to focus on the trade imbalance. That's one issue, right? Like I said, tariff, non-tariff, economic insecurity. The one is on the trade imbalance, and as you've shown just now, we do have a positive trade surplus with the US. Based on US numbers, it's about $25 billion US dollars in 2024. So one is to look at areas where we can reduce that trade imbalance through procurement of Boeing, for example. I mentioned that in my statement earlier in media yesterday, and also looking at areas where Malaysia can increase investments in the United States. And at the same time, on economic security, I think there are ways to look at strengthening our laws to enforce restrictions on certain items. And finally, I think what's important as well is mutual recognition on many of the various standards, especially on agriculture.
Right. Trump has suggested that he may want to impose an additional 10% tariff on BRICS because of their anti-American policies. Might that be something you talk to Jamieson Greer about later today, given that Malaysia is a partner looking to be a member of BRICS?
Well, I can't preempt what he will ask, but definitely, if asked, I will say that.
But what's your message on BRICS?
My message on BRICS, again, BRICS to us, of course, we are, like you said, we are a partner of BRICS. We are not members of BRICS, but having said that, we are applying to be a member of BRICS. So if asked, I will definitely say that BRICS continues to be an important platform for Malaysia, just like EU is, just like GCC is, just like CPTPP is. We have signatory to 18 FTAs and various economic blocs. So that will continue. It's about trade facilitation, about sustainable development. It's not about ideologies, right? So it is about improving trade and investment with other nations as well.
Prime Minister Anwar on a tour to Europe, also in conversations with BRICS. Do you think that would help buffer the impact from these tariffs, or do you expect that to make it worse, given the perception of BRICS when it comes to the US and President Trump?
Well, to be fair, we as a nation, we need to ensure that we continue supporting the principle of multilateralism. And as such, we need to definitely engage all countries. We continue to believe in a rule-based multilateral order with WTO at its core. So for me and for Malaysia, it is important that we continue to engage all countries, including the US.
And Malaysia, of course, the chair of ASEAN this year, pushing for, more trade within the region, pushing for policies to be coordinated. Some say perhaps that could be seen as anti-American, and that is something that the Trump administration is taking action on. Is there risk of that happening to ASEAN member nations?
Well, for ASEAN, again, we are always a proponent of multilateralism, and we are definitely believe in ASEAN centrality and ASEAN neutrality. So again, ASEAN member countries are all engaging the US. In fact, we came out with a joint statement to continue to engage the US, and we are all in agreement that we should not take retaliatory measures against the US.
Is ASEAN any closer to a regional response to the US and US tariffs?
Well, the ASEAN foreign ministers are meeting as we speak. So I believe the ASEAN foreign ministers are looking at coming up with a consensus. But on ASEAN economic ministers, we have already came up with a response in May, and that response still stands, where we will continue to engage the US, and we want to ensure that ASEAN as a bloc continues to have good collaboration when it comes to trade and investment with all countries, including the US.
Minister, Malaysia potentially looking at multiple tariffs. How might this impact the economy? Can you quantify the impact?
Well, Central Bank is still doing the analysis. Based on consensus, the numbers could be between 50 to 100 basis points for the year 2025. Of course, that is dependent on whether it is 25% for all companies or for all sectors and industries. Right now, there is exception given to certain industries like pharmaceuticals, like semiconductor, like strategic minerals. So those are areas where, those are assumptions that have been made. So yes, the answer is based on consensus, based on market reports, that is where we are. But it's not going to be, Malaysia is not going to go into a recession in that case. Our forecast still around 4.5 to 5.5% in terms of GDP growth.
So as it stands now, the 4.5 to 5.5% GDP target is still intact?
Officially, it's still intact, but we will have to wait until the end of July, or in this case, 1st of August, so that the Central Bank and the Ministry of Finance can come up with a revised GDP forecast for 2025 and, of course, for 2026 as well.
What measures might you adopt to mitigate the risks to that projection?
Well, apart from diversifying our markets, meaning increasing increasing our ability to penetrate new markets, we also want to look at the current markets that we are in to increase the access to those markets that we are already in. But we also helping our exporters. Just recently, the Prime Minister announced more support for our exporters in terms of export promotions. And at the same time, at the end of the day, Haslinda, we as Malaysians, we need to make sure that our companies can remain competitive, especially in sectors that we have competitive advantage on. So at the end of the day, the fundamentals are important.
How is that competitiveness being impacted by a dollar that is expected to weaken from here?
Well, again, when you look at dollar versus ringgit and dollar versus the rest of the world, dollar has weakened. But for Malaysia, if you look at the long-term trajectory in terms of growth, the competitiveness of Malaysian companies is going to be a critical ingredient towards the success of the Malaysian economy. We need to focus on increasing the complexity of our economy. We need to focus on ensuring that our export continues to be competitive. And in this current, multipolar world, we need to ensure as well that we continue to engage all markets, all countries, all economic blocs.
Minister, good luck with the negotiations. Zafrul Aziz, Malaysian Minister of Investment, Trade and Industry. Now, the CEO of private equity firm Warburg Pincus thinks Vietnam's deal for a 20% tariff rate in the US still leaves it in a competitive position. Jeffrey Pullman told us exclusively that other Southeast Asian nations will probably end up facing similar levies.
I think Vietnam got out in front of obviously a very complicated environment. And I think being proactive, was a positive. I think landing, we'll see where it lands for everyone else. But I think getting to that 20% threshold makes it very competitive for Vietnam going forward. I think most countries probably, we saw the most recent announcement, my sense is some of those end up coming down as they get negotiated. So I think 20% ends up very competitive. We know the bottom line is going to be at least something more than 10%. So as long as you're kind of sitting in that 15 to 20%, I think it's very competitive. And so I think Vietnam, as we sit today, and obviously things can change, but it feels well positioned given the overall environment.
There are countries like Thailand, for instance, which may just see lower tariffs in Vietnam. Would Vietnam lose its competitiveness as a result of that, or other factors that make Vietnam really attractive to investors like yourself?
It's a great question. I think because a lot of the products that are made in Southeast Asia and in Vietnam as well I think the U.S. administration has been fairly clear that they're probably ones that are not going to be made in the U.S. And so my own view is I think the tariff rates will probably be pretty close, sitting on top of each other across a number of those markets. And the reason being is if you have one country that's at 40%, others are at 20%, it's just going to shift the trade deficit from one country to another. And so I think the U.S. administration understands that. And so my sense is, again, it's going to end up, I think, for ASEAN countries, is my sense, they're going to be pretty, close together on that front. But I think what Vietnam has created is a tremendous ecosystem of the Queen Bees and other of the key manufacturing kind of power centers. And that's very valuable. You saw them produce through COVID. That really established, I think, their reputation even more as a high quality producer. And I think that positions them well, even if other markets ended up at 15% and they're 20%. I still think that's very competitive going forward. As we think about Asia, what I like about Asia is obviously in a world of higher rates, you need growth. Asia is going to represent 2/3 of global growth over the next decade. So I think from that perspective, it's very well positioned. We've been in the region for 30 years. We just celebrated our 30th anniversary last year. In fact, next year will be our 30th anniversary in India. So we've been in these markets a long time. And I think when you think about especially playing the emerging consumer, whether, again, it's in housing and retail, areas like private education, healthcare, and especially financial services. Financial services, if you looked at the last 30 years that we've been in India, there has not been a single moment in time in those 30 years that we weren't invested in financial services. From sponsoring the two largest private sector banks, HDFC and Kotak, through our most recent investment back into IDFC First, which we made after Liberation Day. Financial services is really poised for, we think, a lot of growth going forward.
You talked about India. How about other markets like Japan, which seems to be quite attractive to a lot of investors?
Yeah, look, Japan is certainly, when I think about investors and their diversification, certainly the U.S. has been a huge market for them. Sprinkle a little bit of India, and certainly now increasingly they want more exposure to Japan. Look, we've seen major structural reforms, obviously in terms of pushing more efficiency within corporates across Japan. We think that is transformational from a private equity perspective. It's going to set up more opportunities for groups like ourselves. We've been active in Japan over the years in real estate, whether it's logistics, data centers, life sciences and R&D assets. But from a private equity perspective, I think where we're uniquely positioned as growth investors is there are some great brands in Japan that need help to grow outside of Japan. And so that's one of the great elements of, I think, for Warburg Pincus being a global partnership, is we can help to take those companies overseas and really leverage our footprint around the world.
Warburg Pincus CEO Jeffrey Pohlman speaking exclusively to us at the Techcombank Investment Summit in Hanoi. Up next, we'll hear from the CIO of Singapore's State Investment Fund, Temasek. Rohit Sipahimalani talks about global trade uncertainty and how he's managing dollar risk in his portfolios. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. Long-end government debt has come under further pressure globally this week. Amid a flurry of bond auctions, the results of Japan's sale of 20-year bonds are also out. Avril Hong, as always, on the money. The concern, of course, about fiscal spending. That's dampening demand.
Yeah, so we're seeing how there's one of the gauges of Japan's demand for long-end debt on this 20-year auction, bid-to-cover ratio. We're seeing it above 3, which is not bad, and it's better than the prior reading, but this is below the 12-month average. So it looks solid on the surface, but certainly we still have these continued concerns about fiscal spending. Don't forget, this is an economy that policymakers have been trying to juice with an aging population. This is all going into an upper house election with the ruling coalition having a very weak position, partly because of its inability to ink out a trade deal. So they've been trying to entice voters with cash handouts. And then on the other side, you have opposition lawmakers. They've also been calling for lower taxes. So there's not a lot of fiscal restraint anywhere you look. And no wonder there's no demand or a lack of demand for long-end debt. And then you look at the markets today on JGBs, yes, it looks quite firm, but this is because of the US Treasury strength overnight. And the BOJ also, you get the sense that the hikes are being delayed. But certainly against this backdrop, we have been seeing these fiscal concerns weighing globally as well. And that is something that even Singapore's state investor Temasek acknowledged. Have a listen.
We need certainty around the tariffs. The main impact is really through business confidence, right? And when it's uncertain, it's difficult for you to make an investment commitment. It's difficult for you to hire people, which is why we've seen a bit of a slowdown in the economy, and we expect that in Q3. Having said that, because governments have responded around the world with reasonably aggressive fiscal policies, central banks in most parts of the world are easing or have plans to ease. So actually that impact has been mitigated, which is why the risk of a recession today is, I would say, quite low. And once you have tariff certainty, and then through the year, as central banks are cutting rates, as you see more deregulation in the US, et cetera, we would expect a pickup of growth going into 2026.
Were you surprised in how the ultimate impact from Trump policies played out in the slide of the dollar?
Well, I do think that the way the dollar has behaved this year has been surprising. During risk-off periods, normally the dollar tends to appreciate, and you haven't seen that this year. And it is frankly something that all investors now need to factor in, that you can't just assume a one-way move of the dollar upwards, and now we've seen the reverse out there. So historically, most asset owners would not hedge most of their US dollar exposure, because as I said, during risk-off periods, the dollar would appreciate, so it was a natural diversifier. That's no longer the case. So we, and I think all investors, have now got to factor in the cost of US dollar depreciation on our returns. Like for us, we measure it in Sing dollars. We can, of course, hedge it, but even hedging has a cost. And so we have to factor that in all our investments.
So you don't necessarily expect a reverse higher in the greenback later this year?
Look, I don't think it's very difficult to predict currency movements as such. I think what's sort of clear is that there are forces on both sides. In the very near term, the key forces that are leading to the depreciation of the US dollar is everyone trying to hedge at least part of the exposure, because people had almost no hedges on the US dollar exposure. And that is putting a natural pressure. At some point, that will abate. Beyond that, it'll be a question about capital flows in out of the US, trade flows, capital flows, which we will have to see how they plan out. But near term, I do expect pressure, purely because more people are looking to hedge their exposure, and that naturally puts pressure on the US dollar.
Factor in more US dollar volatility over the next few years than we've been used to in the past decade, Temasek says, Has.
I think factor in a lot of volatility from here for the next 4 years. Avril Hong, thank you so much for that great conversation there. Avril Hong there. And that is it for Insight Horizons Middle East, and Africa is next. Keep it here with us. This is Bloomberg.